Hi, I'm Louis. Is Dnex still worthy to be invested? Dnex main business segments include provision of e-services for trade facilitation, technology consulting and systems integration, as well as subsea telecommunications services. It is also involved in upstream oil and gas exploration and production as well as equipment supply and maintenance services. It is also involved in semiconductor wafer foundry. Revenue and profit. Between financial year 2012 to 2021, the revenue, profit before tax and profit after tax of Dnex had been on an upward trend. Between financial year 2012 to 2021, the net profit margin of Dnex fluctuated from -2 to up to 70%. Between financial year 2012 to 2021, the earning per share of Dnex had been on an overall upward trend. However, dividend distribution was not consistent. Dnex did not declare dividends in some financial years. Between financial year 2012 to 2021, the net tangible assets per share of Dnex had been increasing, indicating that it has been investing in new assets to increase its manufacturing capacity. Between financial year 2019 to 2021, it is shown that Dnex has been investing significantly in property, plants and equipment in order to ramp up its production capacity. Along with increasing sales, it is expected that Dnex earnings will also be rising in the coming few years. Between financial year 2012 to 2021, the return on equity of Dnex mostly ranging between -2 to 30%. Between financial year 2012 to 2021, Dnex equity to liability ratio is mostly above 1, indicating that it is having enough reserve funds to pay off its loans. Between financial year 2012 to 2021, Dnex current ratio was maintained to above 1, indicating that it is having enough funds to pay off its short-term debts. Between financial year 2012 to 2019, Dnex cash flow has been on a downward trend. In financial year 2021, Dnex cash flow amount increased significantly due to cash inflow from issuing new shares and warrants. As reported in 2021 annual report, Dnex shareholdings in both Silterra and Ping has increased significantly. In addition to new sales and contracts, these developments are likely to ramp up earnings in the next few years. Between financial year 2012 to 2021, it is shown that Dnex earnings has been on an upward trend. However, dividend distribution to shareholders has been inconsistent. The 2021 annual report also shown a large increase in capital expenditure to increase its production capacity. This is also reflected in the increase in net tangible assets per share value. Rising production capacity may indicate increased earnings in the future. Between financial year 2012 to 2021, Dnex return on equity performance was fluctuating between -2 to 30%. Between financial year 2012 to 2021, Dnex debt level has been relatively low, indicating that the company's finance is at a stable level. Between financial year 2012 to 2021, Dnex cash flow has also been maintained at a healthy level. Overall, Dnex has a good performance in terms of earnings, financial stability and management. The current PE ratio of Dnex is around 7. Is it still worthy to be invested in? Dnex completed the acquisition of an additional 60% stake in Ping Petroleum Limited, expanding its holdings to 90%. It also completed the acquisition of 60% equity interest in Silterra Malaysia, Sdn Berhad from Khazanah Nasional Berhad. Silterra also entered into a wafer supply and purchase agreement worth $400 million with Chip One. Dagang Net Technology Sdn Berhad received contract extension for the National Single Window for Trade Facilitation from the Government of Malaysia for a period of 3 years commencing from 1st of September 2021 until 31st of August 2024. Innovation Associates Consulting, Sdn Berhad, bagged an ICT contract worth Rm 88 million from the Ministry of Finance Malaysia for the maintenance, support services and application improvement of the IGF mask. That's all for today. Feel free to share your opinions in the comment section. See you next time. Bye. The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis, as well as follow up latest update information before making any investment decisions.